Paragon traders, what's up? It is Matt. I finally have a voice again. Well, kind of. Still a little raspy, but there's been a backlog of content that I've been meaning to get out. And um, it's kind of fortuitous because this week there is a great example of what I want to talk about in this session. Um, I've been noticing some rapid reversals lately, and I've decided, maybe there's a better way to trade those rather than to just hold on to them and kind of become victim to that reference dependence bias. Uh, you know, I'll sell it as soon as it gets back to where it topped out. That's just, I mean, obviously you all know that's flawed thinking, and it's rookie league, and that's not us. So let me go through this. This week. I'm sure you've all noticed the Aussie yen has just been on a tear all week. This started. So this trade started the 22nd. No, I'm sorry, the 15th. Here we go, in the middle of the night. But let me just walk you through what I'm talking about here. I'm talking about this. The theme is going to be exiting sooner because you can always get back in. Now, when I was a new trader, I had several flaws, but one of them was if I had made a trade and it had a gain, um, I exited, I felt good about the gain. And then for some reason, I thought I can't go back to that pair because a, a currency pair can only have so many trades in it per week or some kind of stupid idea in my head like that. And definitely not true. I mean, why can't a currency pair continue to give you more opportunities, one right after the other? There's no reason. And so I don't know why when I would exit a trade, I wouldn't even look at that pair again for a while because I thought, the good trade was already had. I already had it, and there won't be another one for a while. I mean, I guess I didn't know how dumb it was until I actually just said it out loud. And and I'm going to show you why. But, you know, and on this one, it would not have hurt you definitely to just hold through these periods of whoa, what did I do there? There we go. It would not have hurt you to hold, but how much more antacid would you have been taking had you held through these dips where the price goes down and challenges the 50 moving average? I don't know about you, but that that kind of stresses you out, especially when you've made a nice gain in the trade so far, and then it retraces, you know, 40-50%. Well, that kind of stinks, right? Because you just gave back half your gain, and you don't know if it's going to go back up. Like if you're right, oh my gosh, I keep moving those things. If you're right here, right? Suppose you're right here in time, and you're thinking, if I just got in there and I'm right here, I just gave back half my gain. And is it going to go back up? I have no idea. So should I let it go down and test the 50? Because now that's more like 60%. And what if it breaks through the 50? Then I get out. Now I'm down 70% of the gain. Why? That's been my question lately. And another reason I've been focusing on this is because the prop firms that we trade with, they have those daily loss limits, right? And they're based on your high watermark. And this, something like this, if you're suppose you got in, way back here, you've been legging in, and you're pretty levered up at this point, and it does something like this, suddenly you're going to hit that 5% down max drawdown for the day, and you're out. You got to start back over. And I don't want to do. I don't know about you, but I don't want to do that. That doesn't sound fun to me. So let me walk you through this. Anyway, so again, the two hurdles that I always harp on. Please write these down. Two hurdles when I'm going long on a trade. It's got to be above the 50, and it's got to break above the prior swing high, which is right there. So it did that. All right, so we write it up, and move this arrow a little closer. And then I see this happen. Big red candle. Hate big red candles. I don't like, this is what we call a shooting star candle right there, where the wick or the tail is on the top and the body is at the very bottom. It also looks like a croquet club. So if you want to call it that, go ahead and do that, because I don't know why they call it a shooting star. Because we're definitely not going shooting for the stars at that point. When we've had a run up and we see something like that, that's bearish. We know something's going to happen to reverse this trend. Now, how long that'll last, we don't know. But I see that, and I see this candle going straight bearish. I mean, that is a very bearish candle. Opened here, closed here, but got down to here at one point. So I just exit, right? But then I think to myself, okay, I'm going to set a buy stop here, because if it can break that, then I'm more than happy to get back into it, right? So, and if it doesn't hit it, fine. We got out at the great time. We could have got out a lot lower. So, or we could have just held this, and suppose it went down here, and we just wasted all of this time with our capital deployed in this trade that isn't going anywhere. We only have so much capital in our account, so let's use it, or let's deploy it when it's going to be most efficient and advantageous for us. But if we held this through here, that's quite a consolidation right there, and it goes for a while. Yes, it's a high base. We like those. I don't know why that's red. Let's go ahead and change that to green. That is a high base, okay? And we like those. But what I'm saying is, why not get out? And we just scored, almost 58 pips on that one trade. That's assuming you haven't legged in at all. All of these trades are assuming you haven't legged in. So we just made 57 or 58 pips on that trade. Now, I stick this line here and I say, okay, there's no reason I can't get back in if the trend continues, which it does. It ends up continuing. So I get back in, and it runs up, nice high base here, legging in opportunity there, obviously, but it runs up another 81 pips, if you want to round up. And this is what we missed out on. This is all we missed out on right there. So we missed 22 pips, let's call it, of that run. Are we okay with that? I'm okay with that. I've just made 138 pips. I'm okay giving up. I'm okay with it not being 160 pips. 138 is fine. Let's not get greedy. So once again, though, here we go. It's pulling back, and we start to see all of our indicators not look so hot. We get this X here. We get the MACD, starting to converge with each other. So it's, looks like it's going to cross. So at the very least, we're going to have a consolidation event, if not a reversal. Now, again, you went up all this way. Wouldn't it stink if you're right here thinking, why didn't I get out? Why didn't I sell and not experience this stress? Am I going to hit a downside limit? All of those feelings are going through you and causing stress and causing acid in your stomach, and you're popping pills, and it's just not good. So, let's get out here. But then I say to myself again, here's where it got to. That's the new resistance. If it can break above that, awesome. I'll get back in. If it can't, fine. I got out, and I got out relatively unscathed. Because if you look at the Fibonacci, let's take it down to where we got in. I used to get out at the 61.8 line, which is this white line. So I would have gotten out right there. And I don't know how many pips that is, but I'd rather hold on to those pips of gain. So what I'm trying to make my trading better and better and better and make it evolve. So anyway, we do the same thing, and come to find out that yes, it does break above that eventually, but look at all this time you had the capital deployed if you stayed in the trade. I mean, we're on the 15-minute chart, so we've got 1 hour, 2 hours, 3 hours, 4 hours, 5 hours, 6, 7, 8, 9 hours. Would you stay in that garbage for 9 hours, going nowhere? I don't know about you, but I'd rather deploy that capital elsewhere. And I'd rather not risk hitting that downside, that drawdown limit, and get booted and have to start over. Anyway, what that ends up being, I'll move this over, is 17 pips. 9 hours to, who's going to trade 9 hours for 17 pips? In a trade where now, we've already made 138 pips, and now we're back in. So takes another leg up, and we're going, and now we get to this point right here where the same thing happens. So we've got the MACD right there. You can see it sloping. That slope turns pretty steep, and that's it's getting wider and wider. As you can see there, it widens, converges a little bit, but then widens bigger. So why not be out and just wait? We can always get back in. And that gain, another 41 pips. What did we lose by doing that? 9.5 pips. But again, and like I said, this run that it has had is one that we don't see very often. I mean, I'm amazed that I'm actually still in this trade. I think, yeah, I still have a trade going on this today, that I've been legging in. But let's see, where are we? We're on this one. So we got out, we sacrificed 9.5 pips, get back in, goes another 35 pips. And look at the MACD right there. That is a steep slope. Money flow going out. We got large red candles down here. I don't even know where this thing is. Oh, don't worry about this indicator. It's more for options. Anyway, so we get out and look at this come down. I mean, can you imagine the stress? I'm sure a lot of you would have exited as soon as it crossed the 50. And that almost wipes out that entire trade. Definitely this one touched where we got in. So yes, neither one closed below the 50. So that's a positive sign. But still, I'm just waiting for it to break through this new resistance line. That's how high it got. That's where it needs to break through for me to enter again. But meanwhile, I've harvested profits and I'm not letting it take these swings. So what did we lose in that one? We lost 11 pips because we get back in when it breaks this new resistance. Goes up 22.7 pips. Okay. Anyway, well, this keeps going on and on and on and on. What I'm saying is, let's look at an example of where doing this really saved you a lot of retracement. And I found this example here. Let's see. Yeah, right over here. So we got the same thing going on. There are a couple of examples. So let's get the arrow. So this goes up. So that would be the first trade. Okay, relax. Relax, big guy. All right. So get in here, legging in there if you want. But I'm saying this is probably where you get out. And then, what do I lose by getting out there and just waiting for it? 9.5 pips. Seems like a magical number now. And then again, let's do this again. Because look at, it goes down to there. That's quite a retracement. That's about 50%. And why do this? Why wait? Just exit and wait for it to break above that resistance again. I'm telling you, more often than not, this will save you, because we don't have, what's the last time any of you saw a trend that lasts as long as this baby? This thing's been going a long time. Let's put it on the hourly and see. No, I went too far. Look how long this trend has been going. It's just incredible. And that looks like the least of it, right? Because then boom. And I'm in it up here, and geez, I just don't know how much longer this can go. I'll keep my stop there. Anyway, let's look at what happens though in the CAD yen. So we come up here, we get out, then we can get in there again. Then look what happens. Almost right away, literally in 15 minutes, this thing starts going down, and it doesn't look bad there. That's a consolidation, but check out the MACD. It's widening, 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 and it goes down and tests the 50. So now if we'd gotten in there, now we're at a loss, even though it's going to test that 50 and bounce. We don't know that. How often do we see that it just blow right through the 50 and start on a bearish trend? Let's see. I wanted to find a good example. So here's a good example of when it could save you. There's the new high there. If you got out there, fine. But then when it breaks it, say, let's push it up a little bit here. So you get in on this candle. The trusty highlighter. So you get in there. You get out here, because let's take a look at the MAC here. Let's not highlight it. Let's go ahead and actually move it. All right. Look at that. Look at that abrupt. Anytime you see a jagged edge on the MACD. That's not good. That's kind of abrupt, which is why that candle is so. I mean, look at the volume too. And what happened here? So in the UK, actual, this is like jobless claims. The unemployment rate was slightly lower than expected, but I try not to hold it anyway going into those things. But okay, so you get out here, and it's a good thing you did, because now, is it ever going to come back and beat that high? We see what happens. So ask yourselves, where would I have held that to? How low would I have let that go? I hope not lower than the 50, but let's mark the 50. So now that winning trade that we just had, going from here to here, which was almost 57 pips, is now a loss of 19. Stuff like that can be avoided. We don't need to grab every pip out of a trade, right? Let's play it smart. Volatility is the name of the game lately. I was having a session earlier, and look, right when I open it, I see what I hate. Look at this mess. And this is why the Aussie yen is just, because the yen has just been, and the Aussie's been cranking. But look at the jumbled mess in between. And last night I didn't do much trading because this is what I got. Everything just switch back. The only constants are these outliers, the yen and the Aussie. And right now, yeah, we still got the Aussie, got the yen. The euro yen might look good. I bet it does. Let's go to current. Yep, there it is. Look at that. It's a nice trend. Anyway, this is what I want to show you guys. If you have any questions, let me know. But it's just a safer way to play these trades. With all of this going on, this mess, why not take the gain? Just wait to see if it's going to break above that high base again. And I know typically I have been, hold it through that base and leg in again if it breaks it. But lately, the switchbacks are just too brutal. And sometimes they don't come back at all. And meanwhile, you just retraced a lot of your gain and gave it back. We're good traders. Let's not give our gains back. Let's keep those. Capital preservation and growth is key. So let's see. I had a couple other examples, but it's the same thing. If you have any questions about this, though, let me know, and we can work through it in your next session, or start using it in your trading if you like. Again, your trading plan is your own, and whatever works for you works for you. This has been working for me. So that's all for now, and we'll talk to you soon. Bye-bye.